Hello again, everybody, and welcome to the Options Mentor. Well, we've been off here a couple of weeks. I went down to Kentucky for a bourbon festival last weekend. Didn't get a video off, and boy, have we had a run up over the last couple of weeks, haven't we? With a really diving VIX. Let's start looking at things here. Let me share my screen, and I do want to start out with the VIX, as you'll see here on your screen. And it has really dived. It is all the way down to 1351, folks. Now that's as low as it's been in years. So what I like to hear is getting on some calendars that are long Vega, and we're going to make a little change to it to what we have been doing. So let's go over here to SPX and let's look at the analyze screen. And you know, we've been doing a lot of calendars like this, where we sell a Friday and buy a Monday, 3 days wide. And here's an example for next Friday, next Monday, the 4405 SPX calendar. It's a put calendar. We closed the day a few minutes ago at 4409. But what I'd like to do here, if you look at this Vega number, is 4670. Whenever we get this low on volatility, I don't mind a bit getting out 5 days wide. So instead of buying the 26th, we'd buy the 28th. Now, yes, it costs us a little more. It's $7.90, $7.95, around there, where it was $3.20 if we'd have just done the 3-day wide. But what did we get for it? Look at our Vega, 74. Our Vega had been, let's check it here, much lower. The Vega had been 46. Now it is 74. What does that mean? That means we're even longer Vega. So if volatility works for us, then we will have an even bigger pop in our P&L from having that happen. So I like the idea of coming in Tuesday, and you could even put this trade on Tuesday for this coming Friday, 5 days wide. I'm looking to get 10% of the price of the trade and get out. I really think with the run-up that we've had, I wouldn't be surprised if early next week we get a little bit of running pretty tight range. And when we do that, this trade should fairly rapidly get you to 10% where you can get out. Now, if you'd like to do this a little bit less expensive, I have an example over here in the SPY, which of course is 1/10 the size of SPX. And here we're buying the 439 calendar whenever the SPY closed at 439.46. And in this example, it's already 5 days wide. It's 80 cents for the 5 days wide. We'll go ahead and take a quick look at the 3-day wide, which was only, I believe it was 30 cents. Yeah, 32 cents. But I like the idea of the 5-day wide here. Yes, it's about 80 cents. That's about $80 per contract. So you can kind of dial that in if you want to just trade small, or even on paper is fine. But you can do a few contracts for well under $500. Now, if you get up to around 8 or 10 SPY contracts, you might as well just do the SPX because you'll save on fees. And after all, about 10 SPY contracts would be the same as one SPX contract. But I really think getting long Vega is going to pay off here. Definitely the calendar trade is very popular down in this range. Now, I know it's been a while since we've been here, but trust me on this, you will like the calendar if we're down in this range. It can be a very effective trade with short-term calendar trades. So as always, I appreciate all of you guys watching these videos and subscribing to my channel. It just keeps growing and growing. I really appreciate it. So please hit the like and subscribe button, hit the alert button so that you know whenever I put out another video. And tell your friends, let's get this thing going. I appreciate all of this, all of your questions. Have a great weekend, and let's get back here on Tuesday, and get at it after the holiday weekend, and let's get on our trading, and let's use options to our best benefit. Have a great one, everyone. Bye-bye.